Hey everyone, Earl here. Hope you all are doing well. Thank you for your comments and support in the school group. I greatly appreciate it, and I hope that I'm providing some value and it's of some use and help to you all. Just wanted to review really quick and provide a little bit more background and context. I made that post $500 in 21 minutes, and I wanted to just give a little bit more detailed background on that one, just so you can understand kind of how that all came about. Um, I'm on the USD JPY 4-hour chart. Time frame set that I utilized for the trade was 4 hour 15 and 1. If you don't know about time frame sets, keep going through the classes, the course material, and you'll get to time frame alignments at some point. But if you do understand time frame sets, if you understand what I mean by 4 hour 15-1 or daily 1 hour 5, then we're good to go there. This is what the chart looked like. USD JPY 4-hour chart when I came to it yesterday, Asia session. So it was last night for me. The Asia session starts at 5 p.m. my time. So April 2nd, 5 p.m. is actually Asia session for April 3rd because they're like a zillion hours ahead of me. But this is what the 4-hour chart looked like. Really, I like to keep my charts clean. I don't like having any indicators, no volumes, no MACDs, RSIs, no Ichimoku clouds, no Bollinger Bands, nothing. Just a clean chart, price action. The candlesticks are your best indicator by far. What I have here on the 4-hour chart are just a few things of note. Starting, I'll go from the top down. This red line you see across here, that is a high dating back to October of 2022. This is my pair that I trade primarily, so of course I know a lot about it, and I know where all the recent highs are. Basically, over the course of time, there's been, I'll go to the daily chart one time frame higher just so you can see and understand, but there's the daily chart. You see that high back in October 2022, a high here, and then the recent high there. Basically, you've got a triple top. And retail will tell you that, hey, double tops, or triple tops, it's an area of resistance. But really, us KDT traders, we know that there's liquidity sitting above this level. And there's money sitting there in the form of stops. There's stop losses there, right? So all the positions that are short from this area, there's money resting above that level. So if you're a bank, what are you going to do? You're going to go up there and grab it, right? And in the big scale of things on USD JPY, we've got this this bullish run going on right now, and we're reaching for this area of liquidity. So my expectation, based on history with this thing that I've been trading for quite some time now, is that I know this is going to reach higher. And so when I come to the 4-hour chart yesterday and I see this and how price has been chopping around, and you can see this high here, this high here, they're just barely a little bit higher than the other. There's liquidity resting above that level. I would call these relative equal highs because even though they're not perfectly exact, they're in the same general vicinity. And so I know that there's money resting above that level. Fundamentals behind USD/JPY is that basically, if Bank of Japan does not intervene, the prevailing expectation is that this continues higher. The next level to reach for is this 152 level, and beyond that is 153. Bank of Japan has intervened in the past, which creates big drops in this pair. And like this drop right here that you see here, that is not a Bank of Japan intervention. A Bank of Japan intervention looks more like this drop right here. This big drop, that's BOJ intervention, okay? And this is BOJ intervention here, okay? So that's what I mean. When the BOJ intervenes, it really pushes it down a lot. And I think there was some intervention back here which caused that drop, but obviously that was short-lived. So getting back to the task at hand, I'm trading. I'm in Asia session yesterday. I see this. I've got an area of supply up here that I've identified. Price came into it and reacted. And this recent push up, it came from this area down here. I've also identified the weekly opening price, which was here. So the weekly candle we can see is bullish. Now, this 4-hour candle here, which began at 6 a.m. on Tuesday, you can see it came down and then rallied right back up. So there was a reaction right here at this point. Well, what's to the left here? Okay, you can see this candle come up and then it kind of paused a little bit and then it continued up. So it's almost like a rally-based rally. There's a hidden zone in here. Okay, so let's, I'm going to drop down to 15-minute chart. I'm going to investigate why price reacted. So here's where that price reaction is, right here. And to the left, here's your rally, there's your base, there's your rally. And that's where price came down right there. So I identify that. It's this one. Oh. There it is. 15-minute area of interest. Okay, so price already reacted once to that. Now you can see price to have this reaction up here in the supply zone, but keep in mind, I'm looking at the relative equal highs on the higher time frame, and my expectation is that the banks are going to reach for those relative equal highs and the liquidity that's sitting above that. And remember, this red line at the very top, that is that daily, weekly time area of relative equal highs that I believe price will reach for. So even though we see a pullback here, and you say, well, hey, this order flow is bearish. So this is just a pullback. Okay, I'm expecting price to turn and go higher. So as we come into the session, Asia session begins right there at that vertical line. So I'm not going to do anything prior to that. So now we're in Asia session. Still not doing anything. And you could ask me, well, why not take a short position here? Why not go short? Well, I want you to look at something. What I'm looking at is I'm now looking at these relative equal highs here. I'm also looking at these relative equal highs. Okay? Here. Here. So I draw those out. So to me, these are price targets. But what I need to do is I need to see price turn, and the 15-minute turns on the 1 minute. Okay? So price comes down into this area. Now I'm interested. I'm going to drop into the 1 minute chart. The other thing I've noticed is that there's two things here. Okay? There's two things. First of all, price has breached that level, and it's in this area of the demand that it reacted to previously. Okay, now it reached all the way in there, but the candle did not close. It did not close below this low. Okay, so if I saw this candle close lower, like if the close was down here, then I would think that there's more downward. But because price has reacted, I'm thinking a turn is about to happen. So this is what it looks like on the 1 minute chart. And here's how it plays out. Okay, now look what we have here. Look very closely. Price is below that 15-minute low, and it has formed a what? Let me draw it out for you. A W2 formation. Okay, a W2 is when this low is higher than this low. A W1 looks like that. Okay, but a W2 is okay in this instance because it's forming, basically these lows are below this 15-minute swing point and we're in this demand zone. Okay, so What I want to see is price start to pull back this way. And I'll show you why. I wait and I see price starting to pull back. So what I do is I put on my retracement tool right here. Nope, not that one. This one. Okay. So what this is because price broke above here, this high that created that low, price broke above it. It's starting to pull back. My expectation, I want to take a trade in this 15 demand zone, deep retracement into this W2, the 705 level. If you take an entry there and you target the recent high, that's a 2-to-1 risk to reward. It's a 1-to-2 risk to reward. So it's a 2x trade. Okay, that's why I use that. So I put in my long position. I'll remove, declutter it. So there's my long position. I'm going to take the trade here. My stop is placed below that lowest low, and I've targeted 2.26. The reason why it's 2.26 is because I've included the cost of commissions. I've included the cost of commissions. Okay. Remember, got this area of relative equal highs up here. This is the first area of liquidity, and this is the second area of liquidity. Now, I'm not a very patient person. I'm only targeting a 2x. I'm only targeting a base hit. Let's see what happens. There it is. So the trade was executed at 1739, and the trade was closed out at the top of the hour, 1800. 21 minutes, a risk of $250. Your reward is $500 in 21 minutes. Now, had I targeted this area of liquidity up here, that's a 3 times my risk trade, which hit not long after. So let's see, I closed out that trade at 1800, and that hit at 1810. So if I had just waited 10 more minutes, I would have had a 3x trade instead of a 2x trade. But let's continue, okay? I'm going to go back up to the 15 minutes. Here's that trade. First area of liquidity is taken. The second target is up here, okay? Let's see what happens. Price pulls back. Now, here's something that I notice, okay? Here's the high that created the low, and this is the low that creates the new high. It broke this level right here, this little break of structure. What I have below here, right there, is a fair value gap, and I will identify the top of it is right there. So the top of that gap is there. My new target is the second area of liquidity up here. Put on a new long position. Now, I didn't actually take this trade, and I will show you why. I'll drop back down to the, actually, I'll forward this a little bit. Now, as you can see, price is just kind of meandering sideways, which is very typical for Asian session, which is why I get out of these trades so quickly. The big move will happen within the first couple hours of the session, and then it'll just flatline like it's doing here. But I know that there's liquidity sitting above. And let me show you what happens. I'll drop down to the 1 minute. In the trade, retest that area again, the top of that fair value gap. Meanders, and then it finally starts moving. And it finally takes that second area of liquidity, okay? So between these two trades, now this second trade I didn't take at all. I just put that on there to see what would happen. That would have been a 3x trade. So the first one, which I actually did on my paper trade account, was 2x. Could have been a 3x. Second one, a 3x, total of 6x. 6 times your risk in one session here. That's pretty good risk to reward. Now, at this point, you have taken 2 areas of liquidity. I know that there is news coming out in New York in the morning. You walk away and let it play overnight. This is what happened. Now remember, this level up here is those higher time frame weekly and daily relative equal highs. Let's play it out. This is what happens overnight. Okay. You can see price reached for that area, cleared it. The news hit at 0700, and this big candle right here, that's the news. So look what's going on here. We had these relative equal highs taken, these relative equal highs taken, and these relative equal highs up here taken before price was dropped. That's all I have for you today. I hope this explanation was, although a bit long-winded, I hope it was helpful. I appreciate your support. Good luck out there. Thank you, coaches. Thank you, fellow students. I appreciate your teachings, and I appreciate your responses and feedback. Stay safe out there. Thank you, and I will see you next time. Cheers.